Antoniamu, are we ready to start?
Of course we are, and we are back. So, on what follows, we're going to have our third panel with regards to the new developments in banks and payments institutions. So I hope that you have all enjoyed your break and are ready to continue with us with this third panel, whereas the new developments in banks and payment institutions will be discussed. The moderator of this panel is Savva, Territory Channel Manager at Microsoft Cyprus. So during this interesting panel discussion, our esteemed guests and our moderators, besides taking your questions, they will also accept further questions which will be published to all participants via a frequently asked questions, which will be then circulated to all attendees. Also, don't forget, though, to write them down on the Q&A tab below. And also don't forget to share your excitement in your social media via hashtag Cyprus Fintech Summit. So, gentlemen, stage is yours.
Thank you very much. I want to thank also Andreas and Panis for inviting us in this event, saving the best for last show. And allow me to introduce the panel. I have friends and people I know in the panel. So I will start introducing the people. We have Theodoros Savvides, which is the Chief Operating Officer at Link4Pay. So Theodoros, if you want to say a few words about yourself.
Hi. Hi, Paris. Thank you for the introduction. I'm working with Link4Pay. I've been in the payment industry for more than 25 years, so I'm a veteran in the field. I know a little bit of payments, and fintech and payments actually go hand by hand. So Link4Pay is a Cyprus-based company, so we consider ourselves at the front end of fintech in Cyprus, offering services not just Cypriot merchants, but Europe and globally.
Excellent. And then a good friend of mine, Pangratios Vanezis, board member of KPMG. Pangratios, if you want to do a small introduction about yourself.
Hi, Barry. Amazing to be among you. Thank you very much for the invitation. It's a true pleasure. Well, I'm a board member at KPMG. I wear a number of hats, most notably the one I like. It's based on the innovation and financial technology. I've been involved in a number of either deals or audits with financial technology companies, and being at the forefront of putting into projects and solutions and possibly work together, Barry. In innovating the accounting and audit space, which most of you, I know some of you here may find it as boring, which I totally want to shake off the title today.
I don't think it's boring at all. Actually, I've seen all the speeches today, starting with Kyriakos. Our generation is at the perfect timing to start doing things. So we'll discuss a lot of things. Going on to Loizou, which is a partner at Loizou & Co. Luis, a couple of words about you.
Thank you, Paris. I'm a London-based partner of Loizou & Co., which is a firm specializing in mergers and acquisitions and strategic planning. I've been in London for 20 years. We're focusing on the financial services sector and fintech in particular. Previous experience includes investment banking with Citigroup and Barclays Capital. Again, in London, and again, focusing on mergers and acquisitions in the financial services industry. And before that, portfolio management at Kleinwort Benson, Her Majesty's Treasury, which is the Ministry of Finance of the UK, and the UK Competition Commission. I'm delighted to be joining the panel today, and thank you for the invitation.
Excellent. Then we have Demetris Taxitaris, CEO at Maps Platis Group. Demetris, welcome. Few words about yourself.
Hi, Boris. Thank you very much. And Thank you, Andreas and Panis, for inviting me and for having me with you. Hello, everyone. I am the CEO of MEPS Pladis Group. MEPS Pladis is a leading financial services consulting group with clients which include regulators, banks, funds, fund managers, investment firms, insurance firms, and last but not least, payment and electronic money institutions. So any regulated firms in the financial industry, effectively. Our expert teams, comprising more than 180 high caliber professionals, can provide unique and tailored solutions to such firms from A to Z, effectively, which include licensing, regulatory compliance consulting, risk management, internal audit, human resource consulting, regulatory technology solutions, executive training, and innovation consulting. We do operate from Cyprus, where our headquarters is, and have a footprint also in Malta, the UK, and Hong Kong. And allow me to say that which is relevant to our discussion today, our regulatory technology subsidiary, MAP Financial Technologies Limited, is actually the leading regulatory technology firm in Cyprus and throughout Europe, specializing in trade reporting, owning proprietary solutions, and developing software to assist automated reporting of transactions, amongst others, eKYC, etc. And also, I would like to refer to our new project, recent project, which is New Horizons. New Horizons is a franchise from the US, which we have achieved to bring to Cyprus and to offer to Cypriots and the region. New Horizons is the world's largest independent IT training company and an official training partner for technology leaders such as Microsoft, Cisco, Oracle, and so on and so forth, assisting in reskilling and upskilling of people and professionals. So thank you again.
Excellent. I like to hear Microsoft coming first. Just kidding. Then we have a good friend, Nikolas Anastasiou. Nikolas is the head of business solutions and services at Logicom Solutions. Nikola, welcome. If you want to say a few words about yourself.
Thank you, Barry. Good to see you again. And
you're in the office. I see that you're still in the office.
Yes, I'm still in the office. We are recouping. So I'm Nikolas Anastasiou. I have worked in payments. Actually, I've worked in thesis, payments processing, for a few years, and then I started my own company, mostly in insurtech, actually, but also we had some international customers in Denmark and Spain in financial services industry. And thereafter, I moved to join Logicom Solutions as a head of analytics and digital of the business consulting and services unit, and recently undertook the role of the division lead for the business solutions services.
Excellent. So let's kick it off. By the way, I said we are the last but the best group. So I think the people would give us more time in the end, because it's a very interesting discussion we're going to have today. And if I may, I will start with Theo. And he's in the payment system industry. He said he's a veteran. So the question is, what are the trends that are transforming this industry, and what's the future coming ahead?
Thank you, Boris. Actually, payments are evolving across the years. I mean, it's an industry that is keeping evolving. Payments, especially cards, they keep changing all the time. That's why I'm in this business, because it's so challenging. So there are things happening at the moment, especially in certain areas, and evolved. One of these is the analysis of data. As you know, payments in general, there is a lot of information on the background. This kind of information usually was used mainly for fraud or monitoring purposes, using artificial intelligence. Now with the new entities, with fintech companies, they moved this kind of technology into a different space. So we have seen companies using the data to promote new services, offer different payment methods to consumers, and this kind of information is the future. So data analysis and artificial intelligence is one area to be looking at. Other things, again, with artificial intelligence, it is currently in the testing phase. It's voice activation. So we have even payments done through voice activation. Years ago, without the power of processing Internet of Things, this was impossible. Now it's a reality. So a lot of companies are investing in this kind of area. Other things, focusing especially on payment systems, payment institutions, is the ability to offer to consumers a means of paying without having the trouble of verifying themselves in a very cumbersome way. In US, for example, 78% of the purchases, there is a cart abandonment. So the consumer is ready to buy, but when they are trying to verify themselves, these things they fear. And this is where the big giants, Apple Pay, Google Pay, and all these things came into the space where they offer this seamless checkout process. So you can pay with just your face. So your face is recognized during the payment and you're done. Or the neobanks, the digital wallets, have offered this seamless checkout process where you just verify yourself and the process is done. Recently, the adoption of 3D QR, which has been around for years now, the new version now offers this kind of seamless checkout process. So we can see now small amounts not required to verify yourself because there is other ways that they verify your business, like your device ID is known, your email, and all this information gives a better user experience. So fintech companies and payment institutions are focusing on this kind of things. Another area that's really important is the mobile commerce. So you can see now the wallets, the mobile has become the main way of interacting and purchasing and talking to people. So you can see Facebook, there's a button, you see something, you click on it and you buy. So there's no more just the physical card. So things keep changing in payment institutions with that regard. And last but not least, because it was discussed before, is blockchain. So we can see payment because it is part of payments. So a blockchain, we can see it more from my point of view as a means of interacting for cross-border payments. It doesn't have the ability or the capability at this stage for a transaction like Visa or MasterCard, which is done in milliseconds. Because of the verification and the structure of blockchain, it is not such a real instant payment. So the cross-border, though, there is a huge investment done from payments institutions, especially banks, where themselves see there is value in that.
Excellent. I have another question based on what you said, actually. You mentioned AI, and there is a huge war between the US and China with artificial intelligence. And at the same time, when this war started, in Europe, we implemented GDPR. Is that delaying things?
Actually, it's a very good question. We have GDPR, but rules and regulations allow sensitive information that we consider as sensitive to be collected for fraud and monitoring purposes. So, and in addition, when you verify a user, the data pool, it's out there. The data pool, the information was there for years and is still there. Is the way you use the data in your benefit. So although, yes, we have GDPR, but the way you data mine, you perform your data mining, it will be the benefit in the future. So data mining and artificial intelligence comes to overcome these barriers that we put through.
Excellent. Since we are talking about new developments in banks, I will ask my friend Pangratios. He's very close to most of the banks in Cyprus. So the next question is for you. What do you predict is the future of the banks as we know them today? The physical branch going to the bank. We still have people that are going physically to the bank. And also one small detail that I found out like 7 years ago, we have check clearing systems in Cyprus. In the US, they only have one, and it's like a museum.
Yes.
So
Yes.
what do you predict is the future of physical bank as we know it today?
Parimo, that's an amazing question. And obviously, as you correctly said, I am in a privileged position, having been an auditor in banking institutions in Cyprus. I'm also an auditor in payment institutions in Cyprus, so I can see the struggles that Theodoros was saying earlier. I don't have a crystal ball. I can only discuss the trajectory. There are, I think, some existing incumbents that will eventually, transform into something different. And now we have matured in terms of regulation, how we see traditional banks being resolved, especially in the European Union. But we have also seen, and if you actually Google the top 10 digital banks in the world, you will see traditional banks, traditional incumbents that have embraced the new technologies and they have invested hugely in being in transform from the existing model to a new, more innovative model. At the same time, we've seen challenger banks, either through a greenfield or through various processes that, they have a good trajectory at the beginning, but you see a flattened progress in the last year, especially when you try and deal with the regulation game that takes place at the EU. So there is a balance between the two, which I can see a lot of the benefits being, again, on a more traditional, let's say, auditor hat. Wearing my innovative hat now, I want to see more. I want to see banks embracing digital change, digital transformation, and I think we've seen a huge leap from what we had in 2013, for example, and I know you will attest to that, and what we see now. As you correctly said, we have a lot more agile and innovative persons leading the way. They have new ideas and they know how to go about them. Banks know it's either this or bust. And at the same time, we've seen, and I had been asked on a more academic level, how do you reconcile between the low price to book ratios that current banks have with technology companies? It's obvious that the current investors, and I know Demetris can shed a lot more light on that, current investors, they don't consider the business model of banks as it is now for most of the banks as a viable way forward. So yes, we are seeing now, and I'm expecting a lot more less physical presence, so less branches. I know it involves a lot of digital literacy and a lot of digital upskilling, let's say, but the penetration of internet and the penetration of smartphones, I think it's a great step leading the way to what we are going to be seeing in the future, especially in Cyprus. And obviously, with the emergence of all the challenger banks or challenger, let's say, banking operations. Because having a banking license is a different beast altogether. Dissecting the operations of a bank will enable a lot of challengers to come in and take piece by piece the banking model apart. And obviously, I think this is what the investors are also expecting or pushing in the general ecosystem that it is Europe. And I was not surprised, to be honest, and I was a bit on the predictive side, having the European bank pushing for a lot more M&A at the European level, because exactly this is what everyone is anticipating: digitalization, less of physical presence, challenger, and taking steps early enough. But at the same time, I know regulation is going to be keeping a tight leash on technology companies. So the future is, am I looking at the banking institution or a technology company turning into a bank? I don't know. Microsoft, for example, is going to be making cars very more. So or Apple is going to be making cars. So I would not be surprised seeing technology companies turning into the banking gear rather than banks becoming a lot more technology enabled.
I think it's a combination of both. They are joining forces to do things. And I even checked while we were talking what you said. And indeed, in the top 10 new innovator banks, you see BNP, you see Barclays, you see HSBC. So
Exactly.
That's a good sign that things are changing.
Because and I love your nickname. I don't know if it's a good analogy now, but it's a bit of a Goliath process. I mean, it's impossible. If I am the CEO, which I'm not, of these banks, I will keeping my eye on every challenger technology that comes into my trajectory, and I just try and do the relevant M&A, incorporate or have something similar, because now technology, I think we've seen huge talent in the previous panels, and I'm not surprised that the business model of these companies is going to be changing. And last but not least, and I know I'm taking a bit more time, if I'm asking everyone, do you know who's the biggest investor in Tesla now? And I agree with the combination example. It's Daimler. So if you cannot beat them, you join them, and then you find the balance between the two. So you see a lot of these pioneers pushing the way forward, and you see the settlers coming in. So this is the way I am seeing things. And yes, I definitely, yes, exactly.
Synergies.
Yes.
I will have to cut you off. I know that we have so many questions, and I think questions are coming also from the audience. So I will move to Luis now. Luis, we started talking about how GDPR is affecting this. And also I was having a discussion today with Andy about a book I was reading, Capitalism Without Capital, saying that actually the things that have value nowadays are intangible things, and the ecosystem around it, like getting funding, going to a bank and getting a loan, are things that need to change. So we wanted to see, from your perspective, what do you see, if you see any commitment in sustainable finance and in these things changing around the ecosystem of technology and this industry?
Sure. Obviously, from what I discuss with my clients, sustainable finance is high on the agenda. It's something that really concerns the board members of an organization. For instance, if you have a management team coming to the board and saying, look, we have created value for the shareholders, but at the same time, we have destroyed the planet, it's not something that really makes sense to do, irrespectively of whether the company makes money and the shareholders are happy or not. It's definitely the case for many other institutional investors that they require sustainability in terms of committing investments. and definitely is picking up in the trends. And we see a number of firms actually making it as a #1 priority before they move on in any financing they have as a consideration in place.
Excellent, excellent. Thank you very much. Going on to Demetris, I have a question about non-traditional lenders. Do you think that it's something that definitely is growing abroad? Do you see this thing growing in our region, in Europe, in Cyprus, in the countries that you are in?
Good question, Paris. This ties up to the interesting topics that Pangratios touched upon earlier as well. I think we are currently looking at a war between the new and the old world in the banking industry in general. On one hand, we have traditional banks and I'm not talking only about Cyprus now and our region, but that's a global trend, I would say. So with aging personnel, cultural issues, embedded ways of doing things which embrace change slowly, extremely slowly in many instances, requirements to train, to upskill, to reskill personnel, new technologies and new systems and new processes requiring more than 1 year often, or 2 years or more to be introduced, and a heavy cost base in general, which create a lot of issues for traditional banks to allow them to move swiftly and change easily and go into the new world. On the other hand, we have the neobanks or challenger banks or fintech banks, which are definitely more agile and fast and flexible. They embrace technology, they rely on technology, and hence they are expandable easily, and every single client implies minimal marginal cost, additional cost. And so there is a trend there, definitely. There's a trend and which favors, I would say, especially in the next few years, which favors neobanks acquiring a bigger market share from traditional banks, especially in respect of payments, transfers, currency conversions, cards. I would include also deposits only to an extent, and a question mark. I would put a question mark about loans, but the underlying trend there has to do with technology, has to do with the new generations and their culture and their embracement again of technology, e-commerce, the utilization of the mobile, of their handsets, as opposed to PCs or laptops to a much greater extent going forward. And last but not least, what we've seen the last year, which accelerated trends and has to do with COVID, obviously. I'm not claiming that neobanks do not face challenges. Definitely, there's a challenge there as well. There are a couple of challenges. For example, regulators. The approach of regulators, they need to adapt as well to this new world, and they need to understand better. We've seen what happened with Wirecard in the last year or so, and sent shockwaves across this industry. But still, the underlying trend is there intact. And I would also note another important point here, which we've been which is this. We've been observing in the past the concept of too big to fail in respect of traditional banks. We are probably looking forward at a slightly different concept, which is too small to succeed. So the aim of many of these neobanks is to acquire market share fast enough in order to be able to cope with new to cope with their with the critical market share required in order to be able to provide these new products and the services required by this new generation. Now, as regards deposits, the challenge would be versus traditional banks, especially as regards the deposit guarantee scheme. And loans, I would say that this should take a bit more time for them to adapt. But in any case, because this is a global phenomenon and a global trend, Cyprus and our region will not be an exception, and we will be also impacted by this global trend within Europe. And soon we shall see also new banks offering this to Cypriot citizens in the region, and even if our own Cypriot banks do not do so soon enough. So.
Excellent, excellent. We also have questions related to that, but I will combine it in the next question I'm going to ask you, which is near to Luis, because there is a legal aspect as well. I wanted to ask Nikolas also a similar question we discussed with Pangratios regarding, I know Nikolas is very close with different banks in Cyprus and the systematic banks, and I want to see how is the traditional model of the traditional banking model of Cyprus changing, and what is driving this change based on your experience and interaction with them?
Yes, Pari, this is a very good question, but indeed it has some bits and pieces also from what Pangratios very rightly said, but also Demetris. But I will start my answer with something that your founder Bill Gates said around 30 years ago. He said that we need banking, but we don't need banks anymore. So reflecting back to what has he said now, I think he was not entirely right, but he wasn't entirely wrong either. So I think what he meant, he captured the need to make that we need to make payments, right? We need to get loans, we need to invest, but we don't necessarily need a bank to do those things. But these, I mean, if you think about it, all these are kind of transactions that we do, and we can use any service, I would say, to do it. And I don't want to sound like I'm not the pessimistic guy in the seminar. I think Pangratios touched on this as well. The truth lies a bit in the middle. We are not yet ready to, you know, throw the banking system away and the bad banks away, as you know, also here last direct said at some point. Because the fundamental aspect of banking, to what I think the context that is a store of value, a trust. Yes, I know the concept of blockchain and the trust, but the regulations, etc., that were also highlighted, I don't think we are in a position to replace it yet, even with what happened in 2013. But still, even so, I think indeed there are dramatic changes, and the banking model is changing. And the main driver, technology, I think, and data and everything is the enabler. There are, of course, pressures for profitability, but the main driver, I think, is the customer. And the reason the customer is, you know, prefers those companies is because they're providing, at the end of the day, a better customer experience. And it's not all technology companies. It's the companies that my fellow panelists mentioned, like Apple, Microsoft, Amazon. These are companies who are also known for their exceptional customer service. I mean, as far as I know, Amazon opens an issue whenever a customer calls. So their goal is to have such a simple, self-explanatory service that you don't even need to call. So that's the direction, I think, the banks need to go, they need to start. Now the way they work, as far as I understand, you know, they have their regulations, they have their processes built on top of that. They have their channels, they build their products, and then they try to sell those products to the customers. So you need to go the other way around. You need to look at your customers, figure out what they really want, how to approach them, what to offer them, and then adjust the way you do things to do it simple and seamlessly. But this is difficult, of course. And the other thing I would like to say, I mean, at the end of the day, the goal is, and this has been mentioned from many consulting agencies as well, the term is becoming an everyday bank. This is the future of the banks. And that means basically becoming a partner for your customers, not just for their transactions, but for everything they do. You really need to get to know them, be with them before, I mean, understand, do they need a house? How should I help them without just giving them money? Help them find a house, you know, finding the right house, build a platform around them. And this is where the fintechs, I believe, come, because yes, we are not gonna build everything ourselves. There are, we are not gonna reinvent the wheel. There are actually companies who've done it. We need to bring them into an ecosystem now with the open banking and APIs. So at the end of the day, I think the future is to build a platform, an ecosystem, a marketplace for the customers to be in a position to provide real value to them.
Totally agree, and it's something that we didn't mention in the previous panels and discussions, the element of who is the customer. As my friend Theo said, he said we are veterans. We've heard before about the millennials, the zennials, etc. These are the new customers, and they are the ones asking for changes and asking for this technology that Nikolas correctly said is the enabler. And technology is affecting financial services, payment institutions. And my question to the veteran again, since we are talking about the new people coming in.
Barry, allow me before we switch, just to touch on another point that you, at the beginning, I think it was also about the data and the GDPR. And this relates exactly to this. I mean, if you prove yourself to the customer that what you do with his data, his info is truly valuable to him, I believe, at least myself, I would gladly share it, you know?
Totally agree. And it was one of the questions I was saving my end for my end questions that I thought about discussing. No, don't worry. I mean, it's an open discussion. We have people from all the areas here. This is something that I wanted to mention in the end, that it's a matter of culture. I mean, GDPR and anything new you want to bring is how you bring it in. If you bring it like we did in Cyprus, when it came, what was it, 25th of May, 2019? I remember well, it was like, if you don't do this, you are getting penalties. That's not the correct way to do it. Going on to Theodoros again, we said that technology is affecting financial services, payment institutions. And what are your views? What do we need to address in this area for future planning? Because you are you have your own product, you are developing things, you're in the heart of things. What do you think we should look in the future about that?
Actually, one of the things that even banks have to do, it was mentioned earlier, they need to form coalitions. I mean, doing everything by yourself is not the way of the future. So operations, which mainly is in my area in IT, you need to put a plan in place. Doing everything is not possible anymore. I've been through that process, so time to market is essential. So we have to see, and we see now banks going into that area. They form coalitions, they bring themselves the fintechs in. So we have even now the RegTech. So you have technology, fintech companies involved into making regulations, compliance, part of the whole process. So IT and management have to change their view on how they were doing things before. So they need to put a plan. They need to change their architecture. They need to come up with an architecture that you can do anything anywhere. You have to cater for technology like mobile. Maybe the user is on the mobile, maybe it's on the iPad, maybe it's on the laptop, maybe it's on in any kind of device. As we said before, now there are cars. You just go into the gas station. They have built in the cart itself, so you just get out, release the pump, put gas in, and you move out and you pay it because technology is there on the car itself. So you need to form coalitions, especially Cypriot banks. Since we're talking about banks here in Cyprus, they are late. They are not proactive in certain things. They are reactive, and we see them trying to catch up to the neobanks, building a mobile app that looks similar to Revolut. I mean, let's be frank here. They are just trying to catch up rather than having a step back and understand better what is going on. I mean, the changes. Of course, there are small banks in Cyprus, so the investment cannot be huge. At least they have to be reactive on that. And in other countries as well, like in Ireland, the local banks have formed a coalition between them to fight the Revolut virus. So there is things to be done. IT is in the front of this. So technology is in the front of this. So all this talk about changing the way of the future is to realize first what we have here and what we want to go, where we want to go. Consumers is in the front here. We need to give, as I said, simple experience. Give the user things that they expect, the Apple way. You know, you build things that you assume that they will expect, and payment technology has to go down that path.
Excellent. You talked about APIs and open banking, so I will go back to Pangratios. Open banking, open finance, something that started. Do you think it will continue? It will be there in the future? People will stop it, like Theo said, they will try to stop it, or what is your opinion? What is your feedback on that?
Well, Marimo, you are an excellent moderator. Honestly, kudos. Amazing moderation. An amazing,
By the way,
exchange
Panis and
of,
Andreas are pushing me. That
don't push. Don't push.
I'm not. We're having an open conversation. I already know that some questions.
Well, yes. Firstly, we need to understand that where we are as a planet, and I know people sometimes discuss these issues as is a single variate paradigm, and I see it as a multivariate discussion. In 1970, the global population, and I know this is a very, I don't know if you can understand the linkage, but allow me. It was only 3.4 billion. We are now almost double that. The question is, and we discuss about sustainable, and I totally agree about sustainable growth. We are in unprecedented growth and value as a planet. 100 years ago, people lived in less than €1 a day versus what we have now. My view is that there is enough value to be captured by a lot of new technologies and existing incumbents. So I see a race that is people that see that they need to be stopping something. They have to really go back to how industrial revolution came about and what happened when you try to stop an innovation taking place. The way I see it is that it will be in parallel, but at some stage there would be definitely a convergence. Open banking means it's a blessing for incumbent banks to embrace, as correctly was pointed out earlier, what an existing value that is out there, rather than reinventing the wheel and having to invest heavily in a process that it's going to be costing a lot and yielding a lot less in the future. So I see it as a sourcing of value that is out there. If you are clever enough and you can adopt it, great, you will move forward. And I think, again, coming back to my technology, yes, technology first, I think that's why I'm seeing a lot of polarization now. I don't see a lot of different ideas. It's either one, it's a bit of a binary rather than a multivariate, the way I see it. So the problem is, yes, definitely, we've seen Plum taking over, InsurTech. There is a number of different challenges, new technologies that are out there that add value. I see at the same time growth in the global population, pandemic or not, that a bit distorted my data and my trajectory. But we are seeing Africa in 2050 being one of the major players and one of the major drivers of growth. And obviously China and the US is a very interesting paradigm. But what I'm seeing, there is a lot of value to be captured. So I'm more optimistic. There's going to be a more safe transition rather than an abrupt ending to an existing model and a collapse, let's say, and a takeover by another system, by another, let's say, I see a more gradual transition. I see a lot of value to be captured. I see the population growing. I see the GDP growing around the world. I see a lot of technologies being out there, and I see the car revolution. I honestly, and the payments that are embedded within the car. And I agree, it's a platform. It's going to be the way that we see the future is going to be different in 1 year's time, rather than what we see now.
Everything is becoming smarter.
Definitely, now, people are smarter.
Yep. Now, since we're getting pressure, but I don't get pressure, don't worry. I will take the next question, and I will add the question I left behind to Luis. Black Swan events, they inspired new regulatory focus changes. And also my question before that, I want to combine it with Demetris, who's coming next, is someone asked in the Q&A, the peer-to-peer lending. But in order to have that, that also means that we need to change the regulations and the rules around how the industry in general is changing. So Luis, your thoughts as the lawyer of the group?
Thank you, Paris. By the way, I'm not a lawyer, so it's okay. I think I can comment. So I mean, you always have rules whether the bank is HSBC or whether the bank is Microsoft and Apple and so on. We have seen competition regulation in the past with the oil industry. I'm sure we will see that again in the tech space. In terms of risks, you will have risks, I'm sure, technology risks in terms of implementation. They will be on the way. However, what are the risks in terms of strategy? Let's say if you do not innovate, if you do not do that, what are the risks? And I will mention a couple of examples. For instance, in the insurance sector, you offer motor insurance. So when you have driverless cars, will you need to offer a motor insurance? I mean, we insure our iPhones and phones for theft. We do not insure them for causing accidents. Imagine if you don't think, if you're a CEO of an insurance company, you don't think this at that stage, you may end up like Kodak after a number of years. Or if you're a bank and you do not offer an account opening process in 3 or 5 minutes and takes you 2 weeks to open a bank account, will you have any risk here? Yes, you will. You may become obsolete. You may not attract any customers going forward. And the last point I wanted to also mention is, in my opinion, a digital transformation process is not an innovation act per se. So if you digitally transform a traditional bank, you are not necessarily creating a neobank or a bank of the future. And we have seen that in few occasions, actually, with Goldman Sachs creating a digital version of itself called Marcus. They didn't call it Goldman Sachs. We have seen it in France with BNP calling it Hello Bank. And also in Italy with Unicredito calling it a Buddy Bank. There are regulations, there are issues that you have to go through, but what I say to my clients, think what are the risks if you do not innovate, and if you're not ready for the future, what do you do next?
Excellent. Taking on to Demetris, again, we have the questions from before about peer-to-peer lending, and also building on what Luis said on the risk of investing in innovation and what is the best approach in delivering a secure system.
Barry, I will comment on peer-to-peer lending, but I want to add something on the role of Cyprus after that, if you allow me, because I think it's really important and we need to touch upon that and its position as a jurisdiction in this whole discussion about fintech and neobanks and so on. So as regards peer-to-peer lending, this is actually not a new concept. It's a concept which has been around for some time, especially in other countries with more developed markets and critical mass, like the UK, for example. It's there for some years. There is also a regulatory framework in place, which was put in place by the FCA some time ago. There are also few regulatory frameworks within Europe, not as a result of EU directives implying passporting, but as a result of individual efforts and attempts to regulate this industry within those countries, member states, effectively. And I think at some point we will see that in Cyprus. Actually, there are such companies offering this service and facilitating this service in the UK, which are Cyprus-based, really, oddly enough. And at some point, I can see this concept coming to Cyprus, and the regulatory framework being introduced in Cyprus, either as a result of an EU directive or even as a result of market forces. So that will happen sooner or later. Now, as regards the broader macro issue and position of Cyprus in this industry as a jurisdiction, I want to say that Cyprus has a common law framework which is fully harmonized with the acquis communautaire of the European Union. So all directives, relevant directives to the payment and electronic money institutions, the Payment Services Directive, the second one, and the Electronic Money Directive have all been transposed and are in place for some time now in Cyprus. They define the Central Bank of Cyprus as regulator, actually, other than that, as a jurisdiction, we have a skilled workforce which is used to technology, which has been involved in this kind of industry for some time now. And also we have supportive stakeholders, both the government and the private sector. And I know that especially SIBA, the Cyprus Investment Promotion Agency, has been pushing for this industry for some time now in the context of headquartering. And I think that recently also the central bank has been moving towards this direction, approving again certain licenses of electronic money institutions. As far as I know, they have also added some resources in the relevant departments. I think the challenge there, which needs to differentiate us from other European jurisdictions, is the time to licensing. And I know that some work has been done towards this direction, and I hope that this period, this time frame, will shorten in the next months. And I can see Cyprus becoming a hub if this happens. And the other important factor there is to ensure that we do, provided that we can license them efficiently, that we do supervise them and regulate them efficiently as well as a jurisdiction, and we ensure that we don't have any negative publicity or negative events taking place, like the one with Wirecard recently, and that there are no negative surprises and reputational impact for the jurisdiction. So I can see Cyprus emerging as a hub for this kind of companies and in the industry, and we need to work towards that direction, I believe.
Excellent. Having 4 minutes on the clock, next question, and the last question is for Nikolas. Also to Ioannis, Antoniou, Andreas, and Kristen, and Svetlana that have questions. We'll answer those offline. So the last question to my friend Nikolas: what are the key ingredients and challenges that the banks need and face in achieving the transformation, respectively?
Sorry, I forgot to unmute. So I was going to ask how much time do I have, how much time you managed to secure for us, but okay. So I'll try.
3-minute slot.
I'll try to be quick to maybe answer 1 or 2 questions online as well. So I would like first to comment that the term digital transformation, perhaps in Cyprus, is a bit misunderstood, I think, and we often do it as well, where we refer to organizations going through their digital transformation journey, because we are a bit behind in general in that area, although we had COVID to speed things up. Now we start to think about it more as a flow. So you just enter into this state, the digital transformation flow, where you continuously need to invest and evolve and become better. So it's not in the sense that you start and you finish. There is no end in this once you go into it, if you want to keep up. So that is the one point I would like to say. In achieving this customer obsession and becoming platforms and other things we discussed, it's really difficult. I mean, we need to be honest here, but it's something that others have done. As also Louis said, there are banks, BBVA as well, who have done this, and it does come with challenges. It needs a lot of training for the people, but also, the end users, especially if we are talking about Cyprus. But within the organization, it was mentioned at the beginning from Demetris, I think, as well. We are talking about agility. I mean, in terms not only of technical, how we develop software or how we behave. It's all about people, the way they think, the way they approach the problems, the issues, the processes, but also indeed the technology. And again, it's the mentality. I mean, you need to instill to people now. I mean, traditionally, the bankers were seen as people of authority. They would. It ties to what I have said before. Perhaps they look down on people. Like, I'm the banker. You need to do what I tell you to do. Now these things needs to go away, and the banker needs to satisfy the people. So it's all about serving the people. A lot of experimentation needs to be done in a controlled environment. I mean, we should not be able to, we should not be afraid to fail. A lot of organizations do an internal like sandbox or a startup team within the, I think Riser Bank has done this as well, and it's been very successful, and eventually it scaled up the success across the entire bank. So that is another model we see. And of course, we see it through the APIs we've discussed and the collaborations. And to the core, I think it's data. I mean, we said technology, data, of course, these are the key enablers to do it. But as challenges, the key challenge, I think, in building a platform, apart to, you know, digital literacy training, culture, this soft stuff, is also security, something we have not touched enough. As you become more digitally evolved and you open to collaborations, you open your infrastructure to other ones, I think security needs to be taken more seriously across the banking sector, and not only the banking sector entirely.
Totally agree. Before I give it back to Antonia, I want to thank everybody that was in this panel, Theodoros, Pangratios, Luis, Demetris, Nikolas. Guys, it was amazing. I wish we had more time to discuss things. And I will close by saying in physics, there is this power called inertia. You want to move a big rock, the initial force to start moving is called inertia. It's really hard. When it starts moving, then you get velocity. It's the start that stops people. So let's start. I think it's proven through this event that we have people in Cyprus capable, willing to change things. So thank you all very much. Back to you, Antoniamou.
Thank you
It
so
took
much.
us 1 hour and 7 minutes after the 55 minutes we had. And I wish it was more.
Indeed, indeed. It was a very, very interesting discussion, and thank you all for sharing your valuable experience with us. We have all enjoyed it very, very, very much. Thank you, buddies.
Thank you, guys.